Guys, very excited to be here with you all. My goal over the next couple of minutes is very, very simple. It's to really cover all the developments we are seeing in the world of RWAs, what's a trend, what to look out for, and also what can be the practical impact. My goal is very, very simple. I want to empower you with this information and then let you decide what the impact could be on your business, on your project, and also on a personal level as well as we think about the future of finance. My name is Henry Arslan. I'm the co-founder of 9 Blocks Capital. We're the first regulated Dubai-based crypto hedge fund. But I'm also, when people know me, I'm the host of Crypto Weekly on CNBC Arabia and the host of my podcast, The Future of Money. And actually, long-term Hong Kong resident. I lived here for 15 years and very active in the crypto ecosystem. Today, I'm pleased to be joined by a dream team to talk about the space. On my right is Sidney Powell, the CEO of Maple Finance. We're basically an on-chain asset manager targeting basically with over 4.5 billion in AUM. They've originated over $10 billion in loan backed by Bitcoin. One thing you may not know, by the way, about Sidney, he's a big tennis and paddle player. So here we go, as paddle is going on. The problem with paddle is you always need to be 4, which is always a problem in finding that. Teddy Pomprinia, the co-founder of Plume. I call it Plume in French, but hey, Plume is the way, leading RWA network. And when he's not busy with Plume, he's actually a big spear fisher. See, growing up in Miami, that's a big activity there. Great to have you with us, Teddy.
Thank you.
And last but not least is Marcin Kazmierczak, the co-founder of RedStone, the world's second largest blockchain oracle, basically powering DeFi. And by the way, and when he's not busy building, he wakes up every morning at 6 a.m. and from 6 to 8 morning, that's his sacred work time. It's a good piece of advice how to make it efficient as well.
Early bird.
So Sidney, let me start with you as we kick off. We all know about the benefits of RWA. It's transparent, 24/7. There's transparency, like, you know. Right now, and I was a big believer we're going to see tokenized real estate becoming the big RWA play, and I was wrong. And obviously now we're seeing treasury, we're seeing yield products. What do you think is driving the recent interest, and is it really yield who's driving the interest in RWA products right now?
Yeah, it's a great question. You know, a number of us have been looking at tokenization of assets and saying it was going to be coming for years and the institutions were coming, and the adoption has been slower. The real breakthrough was tokenized T-bills, and the reason this was such a breakthrough was that T-bill yield was rising. It was very short duration. People were concerned about credit risk, and so T-bills are about as good as you can get. The tokenization trend is happening. What's been happening next is we've seen tokenized funds, and the delay from my perspective has been the buy side. People have not wanted to lock up their capital for years, but what's happening now, particularly with Bitcoin and the market action being where it is, where prices are kind of subdued, we've seen a lot of people start to think about yield now. And so they're looking more and more at tokenized private credit and tokenized assets. And the other element was that regulatory clarity is improving, and so you're now seeing more traditional allocators start to consider allocating on-chain to private credit, and so we are starting to see massive improvements there. So while real estate may not be the first cab off the ranks, I think you're going to start to see more and more tokenized funds.
So why do you think, maybe I'll move it to you, Teddy, on the buy-side demand, right? There was not much demand. What do you think is the obstacle that we have? Because we talked for a long time, it was regulatory clarity. No, to be honest, we have it at pretty much in many jurisdictions, right? The products are there. There's an absence of yield in the market. Tokenized products can provide it. What do you think is the driver that could bring more of these buy-side players in?
Yeah, no, I think it's a good question. I mean, Sid had a great point too. I think, during the last few years, there was a unique moment where off-chain yields were higher than on-chain yields, and there was a lot of velocity flowing into treasuries, into RWAs. But now what we're seeing, at least from a Plume perspective, is these folks that are coming into the RWA space from the buy side, they need to really understand what they're investing in and what they're actually buying. And from our perspective and the products we've built around Nest and around Plume, we want to make sure that when investors are looking into purchasing, whether it's tokenized private credit, treasuries, alternatives, they really understand the underlying and the risk and return profile of these different assets. And one thing that we're doing differently, I think, to really help them get over the hump here is actually integrating our products into distribution channels. So, Nest on Plume, we're plugging them into big exchanges, wallets, custodians, different chains as well, different partners in the RWA space. What we really care about is distribution as a whole, for RWAs in general. So we want to make it very easy for the normal user to come on chain and just go to the earn section of their DeFi wallet, for example, and deposit stables into Apollo's private credit fund, for example.
And not even knowing they're buying an RWA product or it's even crypto in the back end, right?
Exactly.
But do you think that arrival, before I move to Marcin, do you think this arrival of these players, as we're seeing these big institutional players, is changing the market dynamics as well in the RWA ecosystem?
I think so. I think, you know, RWAs have been around for a while. They were called STOs a few years ago, but now we're seeing a lot of more tailwinds coming into the space. You know, a lot of institutions. We work with, you know, the Wisdom Tree folks, the Apollo folks, a lot of people in New York, since we're based out of there, and they're finally understanding the benefits of RWAs, kind of like what you were saying in the beginning of this panel. You know, the benefits of RWAs have always been very obvious, but what we're seeing now is, you know, even the big institutions, they're not only trying to save money, they're actually trying to make more money. And I think that is where Plume actually kicks in a bit more. Also, like with Maple's product, you know, we're a little bit more on the DeFi side of things now. And it's very interesting when, you know, a big institution like Apollo is actually open to tokenizing the private credit fund, letting people buy these assets, taking the LP token, collateralizing on a lending protocol, and borrowing more stables against it. You must have, you know, you probably heard this term called RWA looping. It's, you know, been popular on crypto Twitter. We were the first chain to really enable that, you know, 6-7 months ago when we launched our network. And I think this whole premise of making more money and making more utility and unlocking more liquidity has been a pretty big trend from, you know,
I want to come back on looping, especially on risk, because I think there's a lot of things. But just, Marcin, moving it to you on what Teddy was mentioning on these institutional players coming in. And obviously you run a big Oracle network. To what extent is pricing and valuation a challenge? In a normal hedge fund, Apollo, guys, of Friday 5 p.m., markets close, it's easy, you have a fund admins, everything's pretty steady, and it's all level 1 pricing, right? How is that becoming a challenge as we're moving to RWA? And is it different, especially if the underlying assets are treasuries?
Yeah, beautiful question. So first, an Oracle is an infrastructure system that aggregates data from multiple sources, hundreds, then segregates that and delivers it to the blockchains and DeFi applications. As you know, blockchains are 24/7. They do not sleep, but the regular TradFi systems have working and off-working hours. First thing that we have to understand is, as you look at the RWA composition right now, over 60% of RWAs are actually yield-bearing. So what the guys were talking about, treasury bills, private credit, I see more and more reinsurance and other products that are meant not to be traded, but rather hold and accrue in value over time. Then the second category of RWAs are tokenized commodities, FX, stocks, so essentially products that are being traded. Whereas the first category is not traded that much off-chain, then the pricing is fairly simple. We deliver it from fund admin or some other source and deliver it on-chain. It's not traded, it's fairly simple. Then we have only the problem of the weekend days, like because it's not the same in the US, it's not the same in France. For example, we work with Spyco, who is French one. We work with Securitize, that is US one. And they have like different days that are essentially holidays for their specific countries. When it comes to the trading products, gold is very interesting. A commodity that recently we've seen have been like in a gold rush, you can even call it. Over the weekend, in regular markets, gold is not being traded, but on chain it is. We are powering HAP-free markets on Hyperliquid, which is a perp dex, and we created a bespoke 24/7 methodology to price gold so that trades can execute efficiently. And then the most important is that the market makers and people who are actually consuming the data we deliver understand what's happening on the closure, the opening, and over the weekend hours. So it's a lot of challenges out there, but we are working with partners to hash it out.
I mean, it's a matter of time. Every asset will be tokenized, right? I mean, this is still an issue during that transition period there. I want to just move it to you, Sid, on one thing. You mentioned treasuries now are being traded a lot. In normal hedge fund trading, normal asset management, we have treasuries or the risk-free rate or SOFR, whatever we're using, that is basically called the risk-free rate. In DeFi, and let's say even when firms are trading on centralized exchanges, you know, and still all the trading is done normally on stable coins. Do you believe that actually products like, you know, what you guys have, like treasuries will become the risk-free rate also in DeFi and also in crypto trading, or we still have a way to go? Because to be fair, a lot of the big exchanges now as collateral, they're just starting to accept BIDL and other products as collateral.
Yeah. I think we've, so I think we have seen people start to comp to like T-bills. we specialize in over-collateralized lending. So what Maple will do is we'll do loans to institutions where we take Bitcoin, ETH, Solana, XRP, other large cap assets as collateral. But internally, what we look at now is kind of a composite benchmark, which comprises DeFi supply yields, so like Aave or Sky, T-bill rates, and then also what basis pays. So we have like a weighted composite, and we treat this as our benchmark, and then we try and hit premium to that. So call it 150 basis points above that, and that's where we try and target pricing. But interestingly, you used to see a divergence where if Bitcoin prices ripped, basis would go up, and crypto lending rates would then go up.
Of course.
Now we're starting to see more of a convergence where people are looking at SOFR and they're saying, well, maybe a Bitcoin-backed loan should be priced at SOFR plus 300. So we're starting to see a kind of convergence of how people treat yields and lending pricing between traditional finance and crypto now.
And that as there's more integration, it'll become even more.
It'll become even closer because a lot of the supply that currently lends in traditional private credit will eventually find its way on chain, and so their opportunity cost will be SOFR plus whatever the spread is in traditional finance.
And have you seen your typical client change over the last couple of years?
No, I would say that's been an area of stability. What we have seen is we've seen more traditional market makers who do high frequency trading in CME and other traditional venues are now doing Bitcoin trading or Bitcoin futures trading. So they've looked to borrow stable coins from us. And so that's been the area of expansion, is like we now have Chicago market making firms coming and borrowing from us. But otherwise, we still do a lot of crypto native. We do prime brokers, asset managers, crypto native trading desks, family offices. So that's been the area of continuity. And then you see other spaces of growth like the digital asset treasury companies as well.
I can see that happening.
Yeah.
Moving forward, Teddy, I want to ask you, as we think about, let's say, the next couple of years of this industry, where RWAs, the industry is growing. I mean, there's no doubt about that. Things are being tokenized. There's more convergence of TradFi players coming in. We look at the last couple of weeks. There's been OpenClaw, a lot of developments with AI agents. It's been there. Obviously, the big buzz. Yeah. How are you seeing it from a Plume perspective? The integration of, or even AI agents trading and being active on the ecosystem.
Yeah, no, definitely. I think AI has definitely revolutionized the way everyone does anything in the world. I think in particular to RWAs, what we're actually seeing, pretty slowly, actually pretty quickly over time, that's been building on Plume is basically, there's a lot of folks that want to build these almost like a wealth management, basically like an AI portfolio management bot, where you can go in with what preferences you would want on your risk tolerance, on like what returns you're looking for, on what asset class you're looking to invest in, and then they can basically spin up a portfolio of the different assets we have on Plume. And so for the user, it's kind of like the abstraction concept we were just talking about. It's very simple now. You just go in and you can just basically tell this AI agent what you are looking to build. It's kind of, I think BlackRock actually has a product like this that they built a while ago. I forget the name. I think it's called Lifeform, I believe.
Okay.
It's very similar. I think they're definitely on the right track already. But the idea of AI agents coming to the RWA space will basically just make the user experience a lot easier. And I think from our perspective, when we launched our chain, a lot of our LPs were very institutional in nature. A lot of the TV on chain, I think it was like 65% from LPs, 35% from retail, but now it's almost flipped.
Oh, wow.
It's around 65-70% retail and less LPs. And so from what we're seeing, there's a lot more retail demand for these different products. I mean, we're the #1 RWA chain by retail wallet holders right now. So having these different products that can help people in the emerging markets really invest into these assets in a very seamless way will pretty much unlock the next wave of users.
And on this point, where are we now on a UX, UI challenge?
We're getting
DeFi
there.
and on RWA. Like on a scale, what grade would you give from 1 to 10?
Maybe like a 5 or 6 to be honest. I think we're still like maybe even halfway. I'm not too sure exactly, but it's not there yet. That's for sure. Even on Plume, we're building a permissionless chain. But at the core of it, we have a lot of compliance architecture built in. We have AML at the sequencer level. We do AML at the vault level as well for our Nest. We do blacklisting, whitelisting, freeze and seize capabilities. So it operates almost like a stable coin. And I think that gives users more comfort. But when it comes to like the user experience of like on-ramping, bridging over to a new chain, learning how to swap from USDC, USDT into an RWA asset, I think that's when things get a little bit more difficult. But there's a lot of like infra providers out there that are helping kind of make this process a lot more seamless. On and off ramps are getting a lot more efficient in that sense. There's like another bridge provider we're working with where you can actually swap USDT or USDC straight into an RWA asset on Plume. And so these kind of features that we're looking to build out over the next few months will really make investing into RWAs more of like a normal operation for like the
That's going to be very interesting competition to centralized firms right now in the traditional space. And also, Marcin, on your perspective, of course, data is key when it comes to this, right? When you talk now to the Bloombergs of this world, all those data, TradFi, legacy providers, how do they see you? And how do you think these big firms will be able to adapt in this new ecosystem that Teddy was talking about and then Sid was mentioning?
Yeah, there's a couple of things to decouple. First, the most important that you should remember about oracles, it's a trust business.
Yeah.
The number one metric for an oracle is how much accurate and reliable data we deliver. And as RedStone, we are the only major player that has never ever had a single price manipulation or downtime event. And we are very proud of that. It is not easy to keep up with that kind of a volatile market, but we pride ourselves in that particular area. Bloomberg, great you brought it up. Yesterday, we hired ex-Bloomberg specialist strategies that spent 4 years over there. He left just because Bloomberg was not quick enough to embrace the crypto and on-chain finance expansion. We want to be the ultimate oracle, blockchain data, and risk layer for all DeFi and on-chain finance that expands on Plume with Maple Finance Asset and many other opportunities out there. Interestingly, we acquired recently a company called Credora, which is sort of like S&P or Moody's on chain. So we deliver risk ratings. So all these strategies that the other panelists have mentioned are coming with yield, let's call it 8, 10%, 12%, but all of them are also coming with risk. And the one that is issuing the asset shouldn't be probably the one promoting the risk of that asset because there's natural conflict of interest. Everyone is going to say, hey, my asset is safe. So we come as Credora with an independent and unopinionated engine that is looking at liquidity, custodians, compliance profile, what is the history of a particular asset to help users omit a situation like Stream Finance blow-up that we saw in November last year, or Terra Luna crash. Of course, there are some risks that we cannot take into consideration, like fat finger. Not sure if you've seen in December, Paxos minted 300 trillion PYUSD for half an hour, which is double the global GDP, right? So those kind of risks are just hard to assess. But some of the risks are very clear and visible. Stream Finance was not a bad luck. It was not a black swan. It was like a very bad design of a system that people essentially aped in without thinking about risk around it. And Credora is here to help them assess the risk before they take a financial investment opportunity.
But before I talk about risk, I mean, I'm always surprised that the Bloombergs of this world are not in the space because it's not as if they're losing revenue. It's like it's a market that's just getting bigger, right? So maybe it's just too big and this is too nimble, but now with the rise of RWA, I'm very, very surprised they have not been able.
I think the biggest issue over there is that they do not understand how blockchain works from the first principle. Gas, bridging, UX, all of that is very, very complicated. So you need some sort of osmosis. For them, it's more natural to work on APIs and old system with financial world. So it's like a new generation, and this is where we are tapping into.
And Terminal still makes money, so hey, why not? Sid, I want to ask you about this on the risk, right? So now as we're thinking, to be fair, the last couple of years, even if you look at DeFi, it's like 150 billion now in assets, or in RWAs, whatever, a couple $1 billion right now. Do you believe that the convergence of now RWAs, DeFi with CeFi actually amplifies the risk? Think about the weekends elements we're having, or some of the fact that these tools are coming together. Don't you think there's a risk that it actually can increase the risk we're having in financial markets because of this element? Or you think it's still negligible, actually it reduces it? Liquidations, for example.
Yeah, I think, so I don't think it amplifies the underlying risk necessarily, because the risk derives from asset quality, whether it's credit risk or counterparty risk. I don't think it amplifies that. What it does do is it can increase the volatility or how much the market reacts to this. You've seen the rise, what we saw in March of 2023, right? The fact that everybody could withdraw instantly from things like Silicon Valley Bank increased the speed at which people overreact to things. And I think if you start to have 24/7 trading of private credit and things that have historically been had less mark-to-market risk and have been more illiquid, then you could see panic overreactions increasing. It's 2 a.m. and you get an alert on your phone and you suddenly try and trade out of a position or try and liquidate a position. That's where I see concerns coming in.
Yeah.
But there will be an adjustment period and then people will adjust to that as the new status quo.
Let's see. I mean, the good old trick of releasing the bad news on Friday afternoon does not work anymore.
It's the double-edged sword of to have more transparency and liquidity. Yeah. You have to be able to trade more often, and that introduces the risk that people overreact and you get kind of stampeding for the exits.
So I tell everybody, if you want to enjoy your weekends, have time with family and kids, do not get into crypto. Worst way to ruin your weekends. Guys, we have a couple minutes left. My best friend, the Bell, is here with me. So I'm going to ask you quick questions. I want 1 or 2 word answers, right? And the Bell is here to keep us honest. You guys are ready?
Yeah.
What is the biggest risk we're facing in the crypto space right now, in particular with RWAs? Sid.
Looping.
Looping. Oh, interesting. Teddy.
Institutions trying to dump on retail.
Institutionals trying to dump.
Dump on retail.
Interesting. Oh man, we could have a whole panel on that.
Exactly.
Marcin.
I do believe the risks associated with particular investment strategies. So the TradFi people dumping on retail, like how it's exactly like composable with the risk aspect.
A student in the room wants to enter the crypto industry. What's the first job they should get into the space? Marcin.
Prep trader. Burn your fingers and you're going to understand what's going about.
Here we go.
Prep trading.
Twitter degen, Discord degen. I think you get a lot of exposure to everything if you're reading all the time.
DeFi intern.
Oh, interesting. I'm starting with that. If you had to go back to university today, what's the one course you would take that you wish you had taken to prepare you for the future of finance?
Cash flow analysis.
Very important.
Similar, actually, yeah. Similar, like
Cash
personal
flow.
finances, cash flow analysis.
Decision making. As a startup founder, you have to create like some sort of like a framework that allows you to take decisions quickly in an environment that is with many unknowns.
Marcel, I'm starting with you. President Donald Trump gives you a call and asks you for your advice on crypto and DeFi. What do you tell President Trump?
Understand oracles, man, because this is like how markets are going to operate in the future.
Our RWAs are the future.
US dollar stablecoin dominance is incredibly important.
Yeah, it probably makes it run the horse longer and faster as well. You have a chance to launch a new crypto business. You have the choice of these 4 co-founders. Who do you pick? CZ, Sam Altman, Jeff Bezos, or Taylor Swift? Starting with you, Sid.
I'll go Jeff Bezos.
Oh, why is that?
Yeah, just incredibly good at building institutions. Always day one.
Teddy.
Probably CZ. I think.
Why is that?
He's just the man in crypto.
We are good in infrastructure. We are not extremely good in distribution and promotion, so I would go with Taylor Swift.
Here we go.
There we go.
And the last question, guys, to finish off this panel on really the future of are we tokenizing everything? The question that I ask anybody that comes on my podcast or TV show, Marcel, I'm going to start with you. You have the choice to go, you have the chance to go have dinner, lunch or dinner with one person dead or alive. Lunch or dinner with one person dead or alive. Who do you have lunch or dinner with?
I think right now Elon Musk, to actually understand if he has like a bigger plan for the next years to come, because many of his decisions, I believe, are very much like one way or the other. And I would definitely encourage him to go even more into crypto, because so far Dogecoin, come on, like it's like very beginning, like surface. If he truly understood like the revolution with RWAs, he could be like a big promoter of it.
Absolutely. Also, we'll find out about what he wants to plans with Mars as well. Teddy.
Maybe SBF, honestly.
SBF,
Yeah,
really?
yeah. I'd be curious to hear exactly what went on in his whole journey.
You know that the SBF's last public interview was with me on stage here.
Oh, really?
His last public interview 4 years ago.
That's awesome.
It's a whole different story.
Yeah.
And to finish it off, the panel on why are we tokenizing everything, Sid, you can have lunch or dinner with one person, dead or alive. Who do you have lunch or dinner with?
Napoleon Bonaparte.
Napoleon Bonaparte, why is that?
Incredible empire building.
Here we go, and then we'll put our hand here as well to finish it off. Guys, big hand of applause to our panel here for the panel of tokenization. Thank you very much, everybody. Enjoy the rest of the day.
Thanks a lot.
Thank you.
Thank you.